Down but not out. One trader says battered retail stocks are a buy ahead of the holidays. In today's cover story, the Chinese government is on a deal-making spree. Plus, the fight for 15 goes beyond fast food workers. And the one stock that 48 members of Congress have in common. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Tuesday, November 18th. In our first look, the S&P still sky high, even as Japan slides into recession. The S&P 500 closed at an all-time high for the 42nd time this year. Also Monday, the Dow rallied 13 points as the Nasdaq lost ground, falling 18. Gold inched up $1 and oil slid 19 cents. Urban Outfitters misfit. Shares of the troubled retailer fell about 5% after missing the mark on its third quarter profit and same-store sales. And a sun and wind deal will play out in the market today. SunEdison shares shot up 6% on word its holding company Terraforma Power plans to buy First Wind Holdings for $2.4 billion. Trader Bob Iacchino at Tethys Partners is here to get the trading day rolling for us. Good morning, Bob.
Good morning.
So we're hearing that the S&P 500 is at a turning point, but which direction is more likely, up or down from here, Bob?
Well, I still think up is more likely. It's just a matter of timing. It's difficult enough to pick direction. Picking direction and time becomes near impossible. But I think new highs are not only likely, they're going to happen this week, in my opinion. We have a very light week of data, and you have the FOMC minutes coming out. That's going to get some clarity to what I think is going to be a sort of longer rate hike horizon than the market thinks, and that should make way for new gains.
You're a smart trader, a big-time trader. So what sectors are you watching?
Well, to be honest, I really like some of the beaten down retail stocks. I'm looking at what's going to be, I think, a positive, very strong holiday season. We've had 9 months in a row now of increased dining at restaurants by American consumers, and that's usually a leading indicator, especially going into the holiday season, that there's going to be a lot of free cash spent during the holidays. You combine that with lower gas prices, I think some of the beaten down retails are going to get a little bit of respite from the selling and are going to pick up and possibly even outperform the S&P.
I'm really surprised you picked retailers. Thanks for coming on the show today.
Anytime.
The stock market is staying strong despite an economic slowdown in Japan. Chuck Coppola has more.
Angie, traders will keep their eyes on Japan today. That's as the nation's Prime Minister Shinzo Abe plans to address Japan's slip into recession. Japan's sales tax was raised in April from 5 to 8%, and some economists say that has kept people from spending more than expected. Abe may delay a second tax hike planned for next October. That's after yesterday's news that Japan's GDP contracted 1.6% last quarter. It's also highly anticipated that Japan's economic setback will prompt Abe to call a snap election. Japan, the world's third largest economy, has struggled for decades due to rising debt and its weak yen.
Also making news, the Swiss private banking arm of HSBC Holdings is charged with tax fraud and money laundering. A report says a Belgian judge accuses the bank of offering diamond dealers and other wealthy clients ways of hiding cash and evading taxes. Prosecutors allege Belgium lost out on hundreds of millions of euros because of the alleged activities. An HSBC spokesman says the bank will continue to cooperate to the fullest extent possible with investigators.
In our cover story, less than a week after China's President Xi Jinping signed trade agreements to lower tariffs for U.S. goods and fight pollution in China, the Chinese president signed 14 commercial agreements with Australia, potentially worth more than $17.5 billion. The message to business leaders is clear. China is open for business. At the 15th annual U.S.-China Chamber of Commerce Trade Conference in Chicago, business leaders from both sides of the Pacific were more than encouraged by the scope of deals signed between China and the U.S.
This set of agreements was set up without a lot of fanfare. The expectations were low, and the outcomes were somewhat surprising to people, I think in a very positive way.
From time to time, sometimes you do see trade frictions between the two countries. I think overall the trend is moving forward. The momentum is good.
The agreements reduced or eliminated tariffs for American technology goods in China in exchange for similar access to America for Chinese companies. Weichai Group makes engine components in China and is expanding to the U.S.
As Weichai, we're the world's largest natural gas engine producer in the world, but people don't recognize that, and we don't do anything here in the U.S. So why not use clean energy as that instigator to bring the two cultures and two countries together?
The U.S. and China also made a non-binding pledge to limit pollution, although some say China has the technology to do it, but rapid middle-class growth has increased demand for electricity and autos.
Most coal-fired power plants in the last 10 years have had state-of-the-art, world-class scrubbers that, when they're turned on, they remove the mercury, lead, sulfur, coal ash. The problem is that most cities don't turn them on because they use about 25% of the electricity output just to run the scrubbers.
This week, China's deals expanded to Australia and, once fully implemented, would allow 95% of Australian exports duty-free entry into China, including tariff-free access for Australian dairy farmers into China's infant formula market.
Rural America is on the decline, and the head of the Farm Credit Administration believes building more food processing plants is one answer. Jill Long Thompson, board chair and CEO of the federal agency that oversees lending to farmers, tells the Chicago Federal Reserve Conference the drop in U.S. manufacturing jobs left an economic hole, causing town populations to wither away.
Commodity-based manufacturing is bringing new opportunities to rural America. And I'm not talking about low-wage, low-skilled jobs here. The Main Street Economist reports that professional and technical jobs accounted for all of the net job gains at rural factories since 2009.
Since the late 1990s, it paid fairly well to stay on the farm. The Congressional Research Service reports that the average farm household income last year was nearly $109,000, and that is considerably higher than the average U.S. household of $71,000.
Where ride-sharing goes, controversy follows. Uber, a startup in the ride-sharing scene, is fighting legislative hurdles around the world. The company lets users hail a cab by smartphone. Uber operates in 250 cities globally, but has been banned in certain parts of Europe and U.S. cities, including Portland, Oregon, and Las Vegas, Nevada. Taxi companies say Uber's cars and drivers are unregulated. Uber contends that it represents the future of an industry that has not faced competition in decades.
The taxi industry is very harsh on drivers. Most of them make a very low income. And so drivers like us, but I'll separate that from the owners of the industry who really don't want to see competition. And that's really where you see a lot of the resistance.
Despite its critics, Uber has its sights set on expansion. The company just partnered with music streaming service Spotify.
The second biggest deal in the energy sector this year leads off our look at M&A action. Halliburton is agreeing to a $34 billion deal to buy Baker Hughes. Halliburton's $78.62 offer is above Baker Hughes' closing price Monday of $65.23. The deal turned hostile Friday. Business is slowing as oil prices fall to four-year lows. Analysts say to expect more mergers as company values erode.
In a surprise move, Botox maker Allergan agrees to be acquired by drug company Actavis for $66 billion. The announcement comes after months of back and forth between Allergan and a different drug maker, Valeant. Activist investor Bill Ackman and his Pershing Square Capital teamed with Valeant in what became a hostile takeover attempt of Allergan. The Activist deal for Allergan is worth $219 per share in cash and stock. Shares of Allergan jumped $10.55 yesterday.
Talks of a deal between DreamWorks Animation movie studios and Hasbro have chilled. According to the Wall Street Journal, the talks, which were at a very early stage, are not likely to go any further. The rumors about Hasbro possibly buying DreamWorks in a $3 billion deal started last week. DreamWorks shares tumbled 14% yesterday. Hasbro closed up 4%.
Continuing to narrow and streamline its portfolio, Abbott Labs sells its veterinary surgical division. The $255 million deal sees New Jersey-based animal health company Zoetis acquiring Abbott's various pet health products. Pet care is a growing sector. The American Pet Products Association estimates that the market for over-the-counter pet medications and veterinary care will increase by close to $1.5 billion this year to a total of nearly $29 billion.
Pfizer is reducing its profit forecast for the year after inking a deal with Merck. Pfizer will pay $850 million for rights to a cancer drug Merck is developing. If the drug meets its goals, Pfizer will pay up to $2 billion and share in the profits. Analysts predict treatments targeting tumors could turn into a $35 billion market.
Beef and pork are bulking up sales at Tyson. Tyson is the largest chicken processor in the U.S., but it added to that in August, completing its $7 billion acquisition of Hillshire Brands, and the acquisition is paying off already. Tyson sales rose 14% last quarter on higher prices for beef and pork. Tyson shares surged nearly 6% Monday.
A new work-friendly version of Facebook could soon be coming to your desk. According to the Financial Times, the social media giant is developing a professional version of its software that will allow workers to collaborate over documents and chat with colleagues. Shares of Facebook closed at $74 yesterday. In a side story on Facebook, the company's upper management has sold nearly $19 billion in stock since 2005 and bought close to $1 million in shares.
Members of Congress have reason to celebrate new highs in Apple stock. According to nonpartisan research group MapLight, as many as 48 members of Congress or their spouses currently own shares of Apple. The stock hit a new all-time high of $115 yesterday before closing at $114. Other popular stocks on the Hill include Wells Fargo, Procter & Gamble, Microsoft, and General Electric.
On the economic calendar for today, it's the inflation numbers of the Producer Price Index coming out and core PPI, along with the NAHB Housing Market Index. Also, net long-term tick flows are out today. On the earnings calendar, Jack in the Box, PetSmart, Lazy Boy, JA Solar, TJX Companies, Manchester United, Home Depot, and Dick's Sporting Goods. Still to come, Lookbook, how one retail chain is preparing for the hustle and bustle of the holiday season. Plus, is a booming sector of the healthcare industry growing too fast for its own good? And checking up on Obamacare as the open enrollment period gets underway.
Obamacare gets a fresh start. The government says 1 million people navigated the health insurance marketplace over the weekend. Round 2 of open enrollment started very differently than round 1, which was plagued by technical glitches that prevented consumers from signing up for insurance. The government has made upgrades to healthcare.gov since the first enrollment period, including a shorter online application and giving customers the ability to window shop.
One of the fastest growing areas in healthcare is visiting nurses and other workers who treat patients at home. The challenge is making that healthcare affordable while also paying a living wage to caregivers. Paul Eggers has more from North Carolina.
With the baby boom generation just beginning retirement and medical advancements keeping us alive longer, the aging of America presents a big business opportunity.
We've grown pretty dramatically. We started with just a half a dozen caregivers, and now we have about 75 caregivers in this area.
Robert Patterson is a franchise partner with Seniors Helping Seniors, a home health care provider where younger seniors provide non-medical assistance to more elderly clients.
We charge $20 an hour, and that doesn't sound like very much, but when you multiply it by 4 hours a day, 5 days a week, 4 weeks a month, 12 months a year, can be a big number.
Of that $20 an hour, half goes to the caregiver, which is actually $1 more than the $9 an hour median wage paid by the industry nationwide. Ruby Kay earns about that doing light housework with another home health care agency.
Is it livable? Basically, no.
Though the Fight for 15 rallies pushing for better pay have focused primarily on fast food workers, home health caregivers have also joined the movement. But higher wages for caregivers means higher costs for retirees, putting added strain on already stretched retirement accounts.
I don't know what people are going to do for retirement.
The cost of long-term care is one that often goes neglected, even for the adult children managing their parents' welfare.
I don't see them running to the local agent to get long-term care insurance for themselves, because now's the time to do it when you're healthy. When you get to be 80, you can't buy long-term care insurance. You got to do it early.
Asheville, North Carolina is consistently ranked among the nation's top retirement destinations. How this city then tackles problems related to home health care may set trends for the rest of the country to follow. Reporting from Asheville, I'm Paul Eggers, First Business News.
Pay for home health care workers is a hot topic in Washington. The Labor Department postponed enforcing its own rule requiring caregivers to be paid overtime and travel time. Republicans say the rule should be scrapped altogether. Coming up, is General Motors stock stalling out? Plus, sugar crash, why the world could soon run low on chocolate. The crazy demand for chocolate around the world is taking a massive bite out of supply. The Washington Post reports Mars is among the chocolate companies warning that people are consuming more cocoa than farmers are able to produce. And that appetite is only expected to grow from here. Most of the world's cocoa is produced in the Ivory Coast and Ghana. However, disease and drought are forcing farmers to turn to other crops such as corn. The economic slowdown in Europe, however, could keep chocolate prices in check.
In Canada, Sears is ending its store credit card business with JP Morgan Chase next November. Sears Canada says the two will work together to explore a sale of the program. Sears Holdings recently said it would sell its 51% stake in its Canada unit.
H&M is stepping into the fashion limelight with celebrity collaborations. H&M CEO Daniel Kula joins us from the Fifth Avenue store in New York City. Good morning. And your stores are on the low end of the price spectrum, but you've managed to land a number of high-end designer collections, including Alexander Wang. How is it working?
This is our 10th collaboration we're doing here this year with a top-notch designer, and we have been wanting and wishing to have Alexander Wang for a while. He's the first American designer we are doing. He lives here in New York. He's spot on now because fashion sports is coming together, like merging in, and we're really happy that we could have him finally here. And of course, I'm standing here now, flagship in New York, and you see the crowd here and the enthusiastic people to just shopping Alexander Wang to really reasonable prices.
Now, H&M doesn't tend to offer coupons or run promotions. That's something most retailers intend to step up this Christmas. What's your plan?
We of course, going into this season, kicking off with Alexander Wang is a strong start to getting awareness about H&M. And for this holiday season, we have also Lady Gaga and Tony Bennett that are facing our new holiday season campaign. So we're really positive going into the holiday season. And then, of course, we're going to have this Thanksgiving week when a lot of retailers are going to do a lot of buzz out there, and we're going to follow and having phenomenal prices. So we don't see it's going to be a lot of promotional holiday season, but when the customer is expecting to have a strong offering, we're going to be there. But overall, with H&M's growth in total new numbers and also our online experience that we have improved from last year and our delivery conditions, we think there's going to be a strong holiday season for H&M.
Will you continue to add jobs, and are you paying above minimum wage?
That's a phenomenal question about, for sure, H&M adding jobs. We did 70 openings. We have added more than 4,000 people this year. We are adding the people that come to us. We have paying above minimum wage. We have strong benefits. We're offering strong pension plans. And then, of course, with the growth, we have promoted over 1,000 people this year in North America. So they're coming to us, they grow, they develop, and we have a strong way going forward. So I just want to hope that more joining H&M because that's going to be a success.
I know fashionistas will be happy to hear that. Thank you. Still ahead, 4 years ago, General Motors was a celebrity stock. Find out about its fan base now after the break. Talk this morning, Dan Deming of Equity Armor Investments joins us. Good morning, Dan.
Good morning, Angie.
Well, it's been about 4 years since General Motors IPO'd on the market. So here we are 4 years later, and the stock is struggling this year. What do you see in the chart, Dan?
Well, it's just interesting, Angie, as you look at what's going on. It did reach a peak here early going into 2014, the end of 2013, rolling into 2014, where you saw it trading just over $40. Now you're seeing kind of a stair-stepping down type of pattern right now. It is interesting, though. It looks like it might be trying to put in a base here down in those lower 36 regions. So we'll have to see how it plays out. But right now, from a technical standpoint, you still want to see a higher high, and we have not seen that yet in the charts.
But what a buy this stock was back when it was around, what, $20 or so?
Well, yeah, I mean, we saw it below $20 a couple of times in 2012, right. So we've seen it move around quite a bit. And another thing I think that's attractive to investors out there when you look at this stock overall is that it still pays a pretty nice dividend. So you do get paid to wait while this stock tries to find valuation. But 4 years later, we're basically $1 or less than $1 away from where it IPO'd 4 years ago.
Would you be a buyer of this stock at the current level, Dan?
I mean, right now, I don't like the way the trend looks right now, Angie. Right here, I'm not a buyer here, but maybe down just below 30 was where I think maybe you could see some valuation there.
Dan, thank you for coming on the show.
Thanks, Angie.
That's it for now. Coming up tomorrow, always on the job. Why Americans feel compelled to answer every email from the office, even on vacation. Of course, we hope you'll stay connected to us. From all of us at First Business, have a terrific Tuesday.